Good evening, everybody. Welcome to the market strategy session for Sunday, August 2nd, 2015. My name is Michael Saul, but you can call me Tiny because everybody else does. In a moment, I'll be joined by my partner, Mr. Paul Schatz, and right on time, there he is. If you are interested in signing up for the Winning Edge Trader Inner Circle, we finally have the page done. So there it is. Okay, there's a nice video here. That's the webinar replay for the 18th. And we talk about yearly plans and all that, but those are all gone. The only plans available now are 30 days memberships, and they're conveniently auto-billed, so you don't have to worry about staying on board unless you cancel. $97 a month. That's all it is. How many trades do you need in order to justify paying for the service? Comment from Mike Rossi, one of our founding members. Thanks for the win on backs. I just paid my annual subscription to Inner Circle. Thought you might be interested. We received that on June 25th, 2015. Here's everything you get, including my infamous trading lessons and the 7:20 p.m. mastermind that we had today. We have every Sunday. So if you'd like to give it a go, 30-day recurring membership. Only $97. It's less than a cup of coffee per day. And you get to hear my wonderful voice on video every night. Well worth the price of membership, from what I hear. Allegedly, that is. All right. We have a thick earnings week this week. Again, a lot of stocks are reporting. But again, Paul and I do not feel that any one stock is going to rumble the market. Let's go through the economic reports real quick. We have 8:30 on Monday, core PCE, and then personal spending. 10 o'clock, a red ISM manufacturing, and that is during the day, and then Powell speaking at 10:50. So we have to watch these because this is once the market's open. You know, it's different when the market is closed because, yeah, well, it may cause a gap, blah, blah, blah. These happen when you may be in a position, so you have to be ready for that. Spanish unemployment change, factory orders on Tuesday. Then Wednesday we have a bunch. Pre-market we have trade balance and ADP non-farm employment. And then during the market we have the ISM non-manufacturing PMI, also a red, and our weekly crude oil inventories. Thursday our weekly unemployment claims, and then mortgage delinquencies. Looks like it's all week. I don't know why it takes all week to report them. I guess state by state. I don't know. I don't care. Rated in orange. Don't know how that. Maybe it'll affect the home builders, but I don't know where else. And then Friday, the job numbers. 8:30 in the morning. First Friday of every month. So go to winningedgetrader.com for a 30-day membership to the Inner Circle for only $97. For the market, okay, I am very interested, to hear what Paul has to say tonight, because this is what I said in the mastermind. I'm going to give you a quick glimpse into the mastermind this week, all right? And that is, I have nothing to say about the market. I do not see any real edges here. I see the S&P could be forming a triangle here. Right now it's wide. The Russell had a nice bounce off the 200-day moving average. The NASDAQ is back above the breakout level. The mid-caps are back into their rectangle. The Dow is lagging, and who really cares? And the S&P is basically, if we draw a line, okay, cutting through a bunch of range that it's been most of the year. It's a little bit higher, I guess, than the mid of the range. But really, it's not doing much. So that leaves us with a stock pickers market. Okay. So, yeah, even though the market itself overall is just going sideways, there are still stocks that are moving in a directional fashion. So, okay, what will happen to the U.S. dollar and stock market when the IFM puts the Chinese yuan in the currency reserve basket in October? Okay, Paul's going to answer that because I honestly don't know. And I don't know if Paul knows, but he'll have a smarter answer than I don't know. So anyway, I want to hear what Paul has to say. Maybe he has an edge that I have overlooked. I would love to hear what he has to say. I know he's happy that the XLY hit a new high because that proves his theory on the GDP being this consumer discretionary, that the GDP, the last GDP or whatever it was BS. But I'd like to hear what he has to say about the rest of the market. So without further ado, here he is, Mr. Technical Analysis and Fundamental Analysis all rolled into one. Short man, Paul Schatz.
Okay. Good evening. Tiny, you're on uphills today. You're like almost giddy. You're jolly.
I had a big ass chocolate chip cookie. So I'm pretty hyped up. I haven't had this sugar rush in like a month. Oh, that's not true. I had ice cream the other day too, but so I'm pretty much ready to go.
Well, I spent the weekend, my wife, my daughter, my mother-in-law went to the city, and my youngest son went to northern Vermont with his best friend. So it was I had my middle son alone all weekend for the first time down here ever. And we saw Jurassic World, which I do not recommend unless you're a kid. That was awful. And we washed my car. We played golf twice. We went swimming. We went to the supermarket. Went out for dinner. Went out for lunch. They have a country fair, a fireman's carnival here, a big one in town. And then one of my cats decided to pee all over my knapsack and my rug in my office.
Very nice.
Great. Oh yeah, and it was where I'm sitting right now. I think it was out of spite because I fed the dog about a quarter of a pound of salmon off the grill that I couldn't finish, so I didn't give her any. So I think she walked in and just peed on my stuff.
Give us some catnip and pat her on the head and say, good job.
He doesn't like catnip. The little cat likes catnip. The dog will like the catnip, but my older cat doesn't like it. So, in any case, I am wiped. So I heard you talking about that you don't see an edge in the market right here, and I kind of agree with you. We can run through it. I don't have any magic words yet. So, I know the employment report's coming out Friday, and there's only so many times we can go to the well to hype the same report every month, and then hang our hats on what the Fed may or may not do. I wrote a blog. Oh my God, my brain's fried. Maybe during this week, that I keep reiterating what I say every 6 weeks, and that is I don't think the Fed should raise rates. And I still don't think the Fed should raise rates the rest of the year. While things in the United States may be okay, I think the world is not. And with oil collapsing and the dollar going up, that's a quasi-rate, whether you don't have to agree, but that's a quasi-rate hike. So it's given the Fed some cover to hang out and do nothing. I said after the first quarter GDP report, I thought it was bogus. It got revised, I think, 4 times in all different directions. I said the second quarter I fully expect a 2 to 3% number, which I still do. The preliminary report I think was 2.3, and it came in at 2.6. But I think we'll print at least that or higher when they revise it, as well as next quarter. I mean, 2.3, 4, 5, 6, 7, 8 is nothing to write home about, but it's not a complete disaster either. And we're creating enough jobs to soak up population growth, but certainly not enough jobs to really get the wage growth going. Wage growth is still, last week, the employment cost index was back to the 80s levels again. So no wage growth. Fed doesn't need to raise rates. Will they? I don't know. But they don't need to. Let's see. So let's dive in. I'll make some comments. Just a word of not even a cautionary word, just a comment. I don't have any sage words of wisdom. I'll give you my scenarios, but we have, a little bit of positive short-term seasonality because it's the new month starting tomorrow. But August is historically not a great month. But it's been okay in the last 5 years. So is there any use in that, what I just said? No. You got a lot of cross currents that may equal nothing. I'm sure the media will start saying very soon that all the traders have gone to the Hamptons for the rest of the summer, as if, the whole world hangs out in the Hamptons. And volume is light because the traders, the ones who didn't go to the Hamptons, are probably frolicking in Europe. I don't buy it. I haven't bought it my whole career. I don't buy it now. So it's just a convenient excuse. So let's dive in. And a lot of these charts look somewhat similar. Tiny can give you the actual technical term better than I, but here we go. Let me just expand these a little bit. Okay. Let's start with the Dow. We have the makings of a divergence down here, which I've spoken about for a while that I'd like to see finally. It's actually, I guess you could say it's a little triple divergence. I just realized that. Low, low, higher low, low, lower low, lower low. So momentum is waning as we've come down. Does it matter? I don't know. These 2 days up last week were very strong. We're very strong. Yeah, we're very strong. They're essentially 80% up days in volume, which is nice. Friday's action was crummy. So you're into some resistance. You're into a bunch of moving averages. You've got a reversal candle. So what would I like to see in a perfect world, which is not going to happen, but I'll say it anyway, I'd like to see the market roll over. Maybe we go sideways a little bit, but I'd like to see one more low right in the middle of this range down there. That's what I'd like to see. Is it going to happen? I don't know. But I'd love to, I think if you get one more shot down, you get enough pessimism where you could get a sustained rally for a while. I don't think where we are right now gives us a great spot for a sustained rally. S&P, somewhat similar, although unlike where the Dow has a nice lower low here, the S&P does not. Kind of stuck in the middle of the range, a little bit higher. I don't really have. I think it's a pair of twos, which will be the theme of the night. A lot of stuff can go either way. I don't have a strong opinion here. Mid caps, just like the S&P, we have a divergence. Okay. Oops. I'd love to see this. I'd love to see one more shot down. Who knows if we'll get it. Here are the small caps. Again, yet another divergence. So that's the theme. Divergences, setting up. Oops. That's the theme. Friday's action not as bad in the small caps as it was elsewhere, because the small caps were really leading early. And the Qs. Qs are obviously a different animal, having made new highs here. No divergence at all set up. I'd probably want to traffic in the Qs short term. I think, which I do because I own them. But if we get another shot down, I think another index is going to lead. So that's the U.S. indices. Here's Europe, which just looks totally different. We have no divergence at the lows. We're trying to put in a secondary low. You all know I hate red candle bottoms. Hate them, hate them, hate them, hate them. So I have no opinion whatsoever in Europe. Although one of my global macro model is long some Europe, so I own some, and I've owned some for 2 weeks, I think. But I don't really have a strong opinion myself. Emerging markets, well, here we get some problems still. No divergence yet on this low. We did have one back in here. Could this be a bottom? Sure. Do I feel confident? No, I don't. I own zero of anything. Here's China. I mean, how does it look? Doesn't look so great. Sentiment on China is getting to the levels that where you expect a rally. I mean, it's really pessimistic, but I'd love to see this low exceeded a little bit. Any emerging markets you want me to pull up? Oh, thank you guys. As it's Scott, I just Ice Road Truckers DVRing, so I'm going to get into bed as soon as this is over and then watch the season premiere. I got to finish watching Meet the Press, and I have like 5 minutes left. Ben Carson's on, and then I'm gonna go watch Ice Road Truckers and fall asleep. Anybody want me to pull up any other emerging market countries? Oh, Frank, let me answer. What will happen to the U.S. dollar and the stock market when the IMF puts the Chinese RMB in the currency reserve basket in October? You know, a lot of those, what I will call them, gloom and doom, fear mongers, basically a bunch of morons who can market because they couldn't manage money for the life dependent on it. But they're all calling for, you know, that IMF meeting in October as being like the end of the dollar and this whole dollar is going to collapse, blah, 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 blah. Yep, no shot dollar collapses. No shot, in my view, whatsoever. As you all know, I've been bullish the dollar since early '08. When everybody else said it was devaluing, it just kept going up, up, up. So, and I don't think that I think it's baked in the cake. Bottom line is this. When push comes to shove, there's only one global currency which all the foreign governments trust. It ain't in China, it ain't in Japan, and it certainly ain't the euro. It's not the peso. So, Frank, what do I think? I don't think a lot unless there's some kind of unusual surprise. Yes, got the ruble, exactly. So I think it's much ado about nothing right now. Again, the British pound, the country's too small. It's like an afterthought now. I do think there's a chance, and I don't have anything factual to base it on, but I think there's some kind of chance of some kind of global event in September, October, and it wouldn't be positive. And I can't even tell you why I feel that way, which is kind of silly. I just do for the time being, but we'll see if we can figure something out as we get closer. All right, let me pull up some of these countries you guys asked for. And where the hell did they go? We got Malaysia, Russia, Vietnam. Okay, I already know the answer to these. Here's Malaysia, EWM. It has correlation with the other Asian countries. It looks better than China and Hong Kong right now. If I had to find a country to buy over there, this looks okay. It looks constructed because you get a very close low to shoot against if you're wrong. So I'd have no problem being long Malaysia in the short term as long as you had to stop on a close underneath the lows. Russia I don't like. I haven't liked it all year. I don't like it now. So here's Russia. I mean, it could certainly bounce. It's in a good spot to bounce. You get divergence setting up. But I think it's the ultimate low. I have absolutely no idea. It just never looks really nicely constructive, so I'm just going to stay away from it. Vietnam, this ETF, I've only traded this, I think, twice, and I'll say I was unsuccessful because I did not like the liquidity of it. It looks constructive. You could certainly support a rally, but you got to be careful with the crummy liquidity in it. But this one looks okay. I just don't like Russia. Let's see. Speaking of the ruble, what does it mean that Russia isn't trading currencies in the Forex? It means nothing for our markets. Does it mean anything else? I'm sure it does, and I would probably want to give it some thought, Scott, but I don't think it means much. The Pope visits the White House September 23rd. No, I guess, and I don't want to predict anything with the Pope, God forbid. I don't know. Maybe it's that I don't think the Greece thing is all neat and tidy and wrapped up. I just feel something's going to, we're so due for a September, October surprise. And I don't mean Ebola. I mean like a real geopolitical surprise. We'll see. I'll talk about it again, or else maybe maybe this is the rantings of a tired guy who needs a drink and go to bed. All right, let's go on to 3 key sectors. The banks continue to look okay. Not great. Banks look okay. They're hanging in at a high level. And I think ultimately, whether we pull back to $34 first, I do see the banks north of 40 this year. So I do see this an opportunity in the banks. They behave fine. Let's go to the stocks next, because the stocks really stunk last week. Stocks are just lying down dead on the mat. They're trying mightily to get going. So we have a little divergence developing, as we've seen already in most indices. But the stocks, this is a pretty steep decline. 102 to 86 is what, 14%, a little more than 14%. It's a big decline. So hard to rate these bullish right now, but they're trying to hammer out a bottom. The surprise last week, was Dow Transports. I mean, we have a divergence, and we've got a higher high for the first time in a long time. So keep a very close eye on the trannies. The next decline we see, it'll be interesting if the trannies don't go down. And if they don't, that will be the makings of an intermediate long-term play. So keep a very close eye on the trannies. Let's go to the other ones. Software continues to trade fine. It's traded great for a long time. It still looks good. No arguments there. Unfortunately, though, my telecom, they bounced nicely end of last week. They still don't have leadership characteristics, and maybe it's either I'm totally wrong on the year, or it's going to be a little bit longer until they get their act together. Remember, this is a 50-cent scale, not a full dollar scale. Internet stocks, FDN. This is another leading sector, so don't ignore the internet stocks. This still is a nice consolidation up here. A little sloppy, but still nice. And this could support, if it went sideways a little longer, I could see this blasting off to 80. That wouldn't surprise me at all. Social media, Social media looks mediocre at best. If I was a big technology player, I would probably use social media as a short against being long internet or software, because these things are not behaving well. Diversified financials look very strong still. even stronger than the banks the last couple of weeks. So that's another long you should keep your head on. Diversified Financials and KRE, the regional banks, look similar to the banks. And maybe this little consolidation here is just another leg down to the low. So maybe this is, 40, we head down to here. And then we put in a better bottom for a run to new highs. I don't know. I'm just throwing it out there as a possible scenario. XLY, oh boy, on Friday, all-time closing high. So I don't think any of you guys are left who used to argue with me about, when Tiny Knight did this for, I forgot who he did it for, some other guy with a newsletter. People would come on and argue with me that the consumer's dead and we're in recession, we're heading into recession. I'd say, XLY tells you you're not in recession. The consumer just made an all-time high. So, phooey that we're in recession. I don't buy it. XRT doesn't look as strong as XLY, but that's only a small subset. Looks like a pair of twos, could go either way. Don't have a strong opinion. XHB, which you guys know I've liked all year, and I still like now. We're getting close again to fresh yearly high, so I do like home builders. So our leaders so far, we've got financials as a lump, they're a leader, and we've got internet, they're a leader, and consumer discretionary, and we've got home builders. So leadership is broadening a little bit. I really want to see the semis step up, but maybe it's not going to happen for a while. XLI and XLB look awful. Here's XLI. Yeah, we had 2 bounce days, and I guess if Tiny wants to call this, I don't know, an island reversal. Tiny, what you want to call this, an island reversal? Okay, maybe not, Tiny. But XLI we haven't even looked at as a long for ages and ages, and I'm not looking at it now. XLB I've hated all year, and I still hate it now, and no interest. Energy. XLE took it on the chin Friday on, I think, Mobil and Chevron's earnings. Not so good. Well, let me pause for 1 second. And I know you guys know this anyway, but this is the classic case where stochastics fails. When you get a really strong trend and stochastic stays buried. So it got oversold, roughly 80 bucks, and now the stock is 70 bucks. That's a big loss. So that's how you get fooled with stochastics when a really strong trend happens. OIH has traded much better lately than XLE. So we need to see this high exceeded. I still have my little long in this. So I want to see this high exceeded this week. But clearly nothing to write home about. We did energy. What else did I miss? Oh, healthcare. I still have my half-size position in healthcare. Had a decent week. We closed the gap. We're only a day away from all-time highs. Can't really complain. IBB, biotech, a few more days from all-time highs. But these are two little reversal days. I think this little short-term pattern here can go either way. It can jump up and close the gap through 95, or we can take out these lows and then have a better sell-off to 360 and then go. I will say this, in all likelihood, into any kind of significant decline, 10% decline, I'm going to go back and buy more biotech. I don't think the rally's over yet. Those of you guys who follow me on Twitter, I've had a running battle with the zero hedge guys since IBB was at 250. At 250, I said 300 or bust, and they disavow the rally all the way to 300, and then at 300 they were out bashing the bulls, and I said 400's next. We fought about it pretty good, and Lo and behold, we're at 400 and they're silent, crickets. I have no problem arguing with people. I have no problem when I'm wrong, because I'm wrong plenty of times, but I always say, you know, I haven't been right about that one. So that's biotech. Defensive stuff. XLP has traded much better, but nothing, it's still in a range, nothing really to write home about yet. IYR, which I own a small piece of, it trades okay. We're getting out of this range. Crummy day on Friday, but it's so beaten down. I'd just be happy with, get me a little 5% rally. I'd be ecstatic in this. Blow it out with a little profit. My utilities finally stepped up, although Friday was a crummy day. But finally, we got out of this. I don't know what we're calling this, whether it's a sloppy head and shoulders bottom or just a temporary bottom or whatever, but at least we're back in the middle of the range. So if I want to get out of them, I can with a profit. What I'd like to see, it. I'd like to see, maybe that's too much. Maybe a rally up towards 45 and then back off and then bust through it. But that's putting the cart way before American Pharaoh. Let's see, did I cover all my sectors? I did. I didn't cover all the sectors. I'll throw up the gold one. I bought a little gold last week. And this is not your typical bottoming pattern in gold. I own some, and I'm being patient, but this many days of volatility coming in, typically in bottoms in gold, you have real sharp V spikes. And this, the longer this happens, the more likely it is it's going to resolve to the downside. So unfortunately, I have to make a decision sooner than later. All right, let's just go to the bonds. TLT. Nice day on Friday, nice day on Thursday. This is looking like a decent little base for a rally. And maybe we little tiny cup and handle, and then we pull back, and then eventually we can get back to 130. I haven't talked about TLT the long side in a while. And now all of a sudden everybody's negative on bonds. So it certainly could support a rally. I have no position. I probably won't do anything here, but at least to look a little more constructive if you're a bull. Come on. Here's the yield chart, which going into the year, my range was 150 to 230. So we breached the top, got up to 250 almost, and now we're back at 220. I think if the market can get going, bonds can fall under 2% again. How would that happen fundamentally? I haven't a clue right now. Maybe there's some kind of geopolitical event in September, October. That does. I honestly, I don't know. Let's see. Let's stop there and go to junk bonds. So here is JNK, and then I'll take your questions in a second. So JNK had a nice precipitous decline. Had a good bounce. Friday's candle not so great, but not the end of the world. It's going to happen, and now we just closed the gap. So J&K needs to put up or shut up right now, period. And the mutual funds look a little bit better than J&K. They haven't sold off as much. But if you go into all the funds in my database, some look like this, and then others have much more significant declines because they're so long high-yield energy bonds and metals bonds, and they've traded poorly. All right, so that's high yield, that's bonds. Oh, let me see the advanced decline lines. And there's nothing, I mean, could you, what the heck is on my leg? Okay. Here's the NYSE AD line. There's nothing to glean from this. It bottomed, it bounced, we're in the middle of nowhere. Not a sign of strength. Here's the the NASDAQ decline is even worse. That's really buried. Nothing to glean from that. And here's the NDX, which should have been a lot stronger, given that we're only a little bit away from all-time high, from new highs for the year. So the stuff beneath the surface is not strong. Okay. All right. Now let me look at your questions if you have any. May want to look at KIE Insurance. You got it, May. I don't pull it up because there's too much M&A going on and it skews it, but this is clearly a leader because it's a leader because I believe you've got all the M&A going on. So you've got a little air under this market. Nothing wrong with it. It trades nicely. 2 steps up, 1 step back. Nope, no. It's definitely a leader. I just be careful. If some of these deals blow up, you got a problem, or if more deals are announced, it goes much higher. Let's see. I did IWM. Is there a restaurant ETF, JN? Not that I know of. All right, we did Johanna. We did the insurance group. We did JNK. Rick, we're going to do oil in a minute. Let's see. Doesn't the AD line overall suggest that a bearish pattern should be developing? Anita, the answer sadly is maybe. The AD line, the AD line is getting pummeled because of interest rate related instruments. So I'm not disavowing it. That's an important development. I'm just saying that it's not necessarily a bearish pattern. We'll see how the rest of the market sets up. Don't forget this when it comes to the AD line. It can trick you. Why? Because the AD line bottomed in 2000. I think it was end of 2000. I could be wrong, but I don't think so. So the AD line peaked in May of 98, while the market didn't peak till March of 2000. And then the AD line bottomed in December of 2000, and the market continued lower for the next 22 months. So it fooled everybody. And that's how we got that 50% decline. Why is the 10-year yield going down? Gavin, because long-term interest rates are set by the market, not the Fed. Long-term interest is set by the market, not the Fed. It would be very troubling if the Fed began to raise rates and the 10-year yield kept going down. That's called a flattening of the yield curve, and that usually precedes recession down the road. John will get to gold in a minute. We'll do gold and oil next. I haven't found a restaurant ETF, but I've heard that there are new ETFs in the works. Yeah, Scott, there's got to be several hundred ETFs that are in registration. So whenever the market is accepting of certain kinds of products, they'll probably come out. Is it not also a warning flag that many stocks trade below the 200-day moving average? Yes, Johanna. That just means, however you want to slice it, talking about restaurant ETFs, but Johanna, however you want to slice it, it's not a sign of strength when the troops in battle are already dead and only the generals are left to fight. That's the problem. Gavin, what's my range for the 10-year bond next year? I don't have one for next year. I think, and I'm not going to even think about that till we get through October. Let's let's figure out what if anything happens into the fourth quarter, and then I'll be happy to discuss ranges for next year. If the AD line tricks us, what do we take away from analyzing it? Well, Greg, every indicator we use at one point or another fails or tricks us. It's not that, so there's no panacea of indicators. You just have to know when to look at it, what you're looking at, and you got to use more than one thing. So in December of 2000, when the AD line bottomed, there wasn't a lot of other bottoming indications anywhere. So AD line does a pretty good job at peaks, more than bottom, but I think it's good all around. Just not going to be 100%. Is the 10-year yield a long-term rate or long-term? So it goes essentially 90-day T. I'm not going to go into all the interest rates, but 90-day T-bills, very important. And then the 2-year Treasury note and the 5-year Treasury note and the 10-year Treasury note. The 10-year Treasury is the bellwether bond, and then the 30-year. So it goes 90 days, 2, 5, 7, 10, 30. Those are the important ones, and that's your real yield curve. And what do I use to look at the yield curve? I mean, you could use any one of them. Some people use, I like 2 and 10. 2-year yield and a 10-year yield is fine. You want to go 2 and 30 or 5 and 30, that's fine. I just wouldn't go 7 and 10 or 7 and 30 or 10 and 30. That's too long. Okay, let's forge ahead and go to commodities. Gold, which I said, so sentiment on gold has been at record lows, meaning everybody's been bearish gold, right into this low. Okay? Everything's in place for gold to make a bottom, not necessarily the bottom, but a bottom. Price has to cooperate. Price is the ultimate arbiter, and so far, price has not given us the green light. Gold has stopped going down, but it's not going up yet. So at some point, the first move will be, probably to 1130, 1140. If we close below this low, then you got to get out. But at some point, we're going to get a bump to 1130, 1140, and then you see what happens. Crude, similar to gold, sentiment is horrendously bearish. Everybody's negative, but price must stabilize first. That's going to be the theme of a lot of commodities and a lot of currencies. So there's gold, there's oil, here's copper. Same thing, copper. Trying to bottom. Price, this looks a little more interesting right here to me than the others. You got a reversal here and a reversal here and a divergence. All we need now is copper to want to start chugging higher. And natty gas, as we say every single week, continues to build its bottom, but the bottom's not in yet. This is how commodity bottoms are made. Same comments I make every single week. Eventually, natty gas is going to go. And when it goes, it's going to be like one of these moves to 4 or higher, but not yet. We did oil, we did gold, we did natty gas, we did copper. What's new? Oh, the dollar. What happened? Here's a dollar. I mean, it's been in a trading range for 5 months. It's so funny that multinational companies are reporting earnings are all blaming the dollar. Give me a break. I mean, back in here, it was understandable. They're not blaming it. They don't have a good excuse, but a dollar going sideways does not hurt them. They've already been able to adapt and adjust and build into their models. So give me a break. The dollar looks fine. I've got no issue with the dollar. The euro, which is essentially opposite the dollar, had a crummy day Friday. We'll see early this week if it's ready to take out the lows just yet. Yen, same thing. It's been brutal if you're a yen trader. Oh my God. Long term, I remain confident the yen's going down another 25 to 50%, but not yet. Just tough to trade. Canadian dollar sentiment hit another all-time low. It's disastrous in the Canadian dollar, which usually has a correlation positive to oil. So you get oil buried, you get the Canadian dollar buried. I mean, look at Mexican ETF. That's kind of buried. I mean, these things are supposed to bounce sooner than later. Price is just not cooperating yet. Let's go to the grains, and then we'll call it a night. Common theme here is this. You can't call it a bull trap because this trap, the bear is first and the bulls. I frankly am very surprised that wheat's given back almost the entire rally. Very disappointing. No sign yet of a low, but you'd want to look for a bottom this week to trade to the long side. Corn, same thing as wheat. Same thing. Was Thursday a low? Maybe. You want to look for a bottom this week in corn. And Beano, same thing there. Try to look for a low this week. Don't get carried away and crazy. But let's go to sugar. Sugar. Yikes. Death. Nothing to do here. Sugar looks like death. Cotton, though. Cotton looks interesting. Of all the ones I looked at, there were two that looked really interesting. Cotton looks like a worthwhile long play right now. If I like cotton, I'd give it a shot. Give it a tight stop down in here on a close, and then see if we can get a move back to the old highs. That's one. And here's cocoa. It's oversold, but as Tiny would tell you, this is a really nice maybe flag setting up to get one more shot down in cocoa this week. And the anti-Starbucks commodity. Oh my God. Coffee, like natural gas, we're just sitting and waiting and waiting and waiting and waiting and waiting. Eventually it's going to go up. So look at Starbucks. What the hell is that trade? Yeah, coffee. Okay, nothing there. All right, let's see. Last call for questions. What is holding up deer if all these commodities are down? This is a tiny question, but I just want to see. I haven't looked at deer caterpillar in a couple of weeks. Yeah, deer's trading okay. Off the top of my head, I don't even have an answer, so I'm trying to think of currencies, but there's really nothing there. I couldn't tell you. There must be something good fundamentally because it's driving right through the poor, big macro stuff on deer. Someone asked for May wants silver. Silver looks very similar, May, although gold did hit my downside target that I've talked about forever, which is sub 1100. Silver did not go sub 14 for whatever reason, so I'd rather wait until gold begins to go or silver gets below 1400 to get excited. Let's see. How do you put in a tight stop on a commodity that can? Yeah, Scott, you're right. Scott asked about getting stuck when something's limit up or limit down. And the bottom line is, any commodity trader will tell you, you're never really a trader until you get caught short a commodity that goes limit up for a week. or you're long a commodity that's limit down for a week, because they don't trade. Means you can't get out. You're stuck. You're right, Scott. It's a problem. Commodities are more aggressive. Why is Spain 20% below its 52-week high when the growth rate in Spain? But Gavin, don't get, price comes first, and then comes the fundamentals. So, wait, 20% below? It's, Gavin, I'm not sure that's correct. No. Gavin, I think the, why is Spain 20% below? Oh, I see what you're saying. You think it should be much stronger. Well, don't forget, in January of 2008, the U.S. printed a great fourth quarter GDP report, and markets were unraveling because stuff like growth rates and employment are lagging indicators, not leading indicators. So that's telling you that the fundamentals in Spain don't look so bright, a couple of quarters out, would be my take. Let's see, do we keep sugar? Do you have an opinion on the euro, U.S.? I really don't. I think it's ultimately, I forgot to ask the question, my apologies. Ultimately, I think we're going down here. But could we rally first? Sure. But longer term, I feel really confident that we're going down significantly. Oh, Nandita. Rick, what was your, I see you posted divergence. What were you talking about, Rick? Oh, silver. Sorry. Oh, I imagine, yeah. They almost have to have divergences. Yeah, a little one. Nothing to write home about, but not bad. Yeah, definitely divergence. Right here, right there. Any other questions, comments, concerns about anything? I am fading fast. Thank God I showered twice today. Any other questions, comments, concerns? Oh my God, Jan asked about my mattress comment. Sleepy was here again because the bed we got doesn't match the bed that was in the showroom. So I measured the foam components and they don't match. So they sent the new bed out and it's the same bed we already have. So we have a quandary we're dealing with. I don't know what to do. The bed in the showroom is really, really, really soft. And when they sent us that bed, it's really, really firm in our bedroom. Our bedroom is not exactly 65 degrees right now, so I'm just worried that we got a problem. So we'll deal with it. Not as bad as my garbage man. His truck blew a hydraulic hose, and there's hydraulic fluid all the way down my driveway. And their initial response was, well, we threw down some quick dry, the stuff that looks like kitty litter. And I said, no, I'd like you to fix my driveway. And they said, well, no, we're not going to do that. I said, well, you made the mess. It was your truck that blew the hydraulic hose. So that's great. I was on Pain Thursday night. If you want to get some popcorn, you probably missed it. They changed the format of the show, and it's a lot less stock market stuff now. So I'm not sure what my future will be because it's a big trip for me to go to the city to do 2 segments. As much as I like Charles, and I really like going to Fox, it's become more of a news show. I'm surprised because I guess viewers must like it. Everybody who I talk to says they don't like the new show. They like the old show when it was a bunch of market comments and stock picks, but now they've got lawyers and doctors and politicians and commentators. So it's definitely a different show, and I'm not sure that I kind of fit in. So the answer, Scott, is I don't know. I was in last week, but we'll see. I may try to go find some other shows to do. And I really do like that live Yahoo show. That was fantastically fun. I got to try to get back on that. That was 15 minutes with Mike Santoli, and I can't remember the woman's name who didn't like me, but a really, really, really super attractive blonde woman who was thin. And I made fun of her because she was wearing a down jacket on set. And I don't think she liked me. Oh, well. I apologized. Okay, any other questions, comments, concerns? Okay, so I am going to assume we get a nice quiet week. And then we'll be back. I did go over sugar. There was nothing to write home about, Joanna. We're sitting waiting. Nothing really good there. Like most of the other commodities that looked interesting were cotton on the long side and maybe cocoa on the short side. All right, so we shall see you next Sunday evening. Have a great week. Tiny, I'm all done.
See you all next week.